buying and selling, making 10, 15, 20 handles down, 10, 15, 20 handles up, 10, 15, 10, back and forth, back and forth. And you can going back and forth, and you can afford to have 2 or 3 losing trades, get stops, commission only, and still have, triple digit handle runs or triple digit pips in a day. But the market you're trading has to have the ability to have that measure of volatility and not just be wonky back and forth, aimless price delivery where it's better for you to say, it's not.
Good morning, everybody.
It's
Live with Fractal Effects.
To take one trade and be done.
Please make sure you read the disclosure.
One in the afternoon and be done.
If you're following along with us, make sure you do in a demo account. As this is for educational purposes only, we are not financial advisors, and this is not financial advice.
But having
our job is to help you learn how to trade and become proficient probability traders. Today we'll be looking at NAS. There is no news, so there might be some volatility. Even when there's no news, sometimes there's volatility because there's no smoke screen. It's a bit of an erratic pattern. A little back and forth, but let's jump onto the charts.
I like the idea of still getting up here. That may demand an afternoon or tomorrow framework to do that. I don't know what we're going to see in the afternoon right now based on what we're seeing because it's a rather quiet news day. I'm not abandoning, let's say it that way. I'm not abandoning trading up into here for today. I think that there's a lot of buy side resting here.
So we're in a 5-minute fair value gap.
Maybe we topped.
Fair value gap of interest. No confirmation as of yet. So let me just bring this chart down.
See each other. This is the buy side. And I outlined today live with you the morning run.
We did not take out London highs. We bounced
price delivery continuum theory
off of the London fair value gap.
How far it can go outside the realm of a fair value gap.
Now we're just waiting for confirmation.
Where the entry models would be.
We are bullish on a higher time frame. Right now we have a green box.
That's undeniable. You can't argue that. It's been shown to you.
We have a manipulation play down.
Alright, so
just gonna wait for that confirmation.
Everything that was outlined all through here with the 15-second and 1-minute chart PD arrays and where it reached up to the lower quadrant and the consequent encroachment. Go back and look at your charts and your examples of when you would expect a certain level to draw on liquidity. Again, as a reminder in closing, you do not need that draw on liquidity to be reached by price. That doesn't equate to success. Success is measured by where you can see a beginning point where price can move from up to that terminus. And if you can frame a setup that allows you to have 15, 20 handles, then in my definition, that is a high probability likelihood.
Going to push right now on the other side of that fair value gap.
So it's not a guarantee you're going to be profitable in it, but it's a green light that you can take it. And all you do is simply look for inefficiencies because his model is gaps.
Today is Tuesday. Tuesday's footprint usually sets the low of the week.
Gravitating and keying off of new day opening gaps, new week opening
65% chance that will set the low of the week.
Bringing in the higher time frame as we were talking about yesterday. It's not just simply intraday charts. So we're looking at elements that are found on the weekly and daily chart. And we'll be
so there's Monday's low.
When we're looking at how to hold on the trades better.
So even though we are bullish on a higher time frame, we might have a bearish session.
Focus right here going into lunch, okay? Right down here. And that's going to be it for today. Hopefully you found this insightful. And until I talk to you tomorrow, Lord willing, be safe.
Still waiting for confirmation. We're below the 238 on the 5-minute, which is another indication of potential bearish activity. So we'll see if we did have a shift of the 20 and the 50 EMA, and then we had a retracement into them, but you can see they never really crossed back over, and then we dropped. Now we're under the 238 on the opposite side of the consequence encroachment of that fair value gap of interest, the New York fair value gap, which is painted out by the indicator. London had a clean session. We had a bearish confirmation. We had a retracement right back into our fair value gap of interest, crossover of the EMAs, and a push right into New York. As mentioned before, London is one of my favorite sessions. It's usually clean on when there's no news days. The only thing, though, is it depends on what time zone you live in, as it does become a hard session to trade and stay up for.
Polling and a new jolt of energy, Republicans took to TV to beg Donald Trump to stop.
We're going to gesticulate here, I'm sure, for a little while. Collecting orders on both sides. I'm sure we're going to go back up. Maybe back into here before actually pushing down. So right now, again, as mentioned before, you want to have a daily bias and a session bias. Right now, our daily bias is obviously bullish, but there are certain points of confluence that are pointing more towards a bearish sentiment for our session. That's why we need more points of confluence. We need confirmation. Getting that push now. Let's see if we can't get that bearish confirmation. "45 seconds left. Let's see if it sticks." "20 seconds. So this is a pretty interesting day as far as news. We do have Fed Chair Powell speaking on Friday. We have unemployment claims tomorrow. Oh, no, sorry, on Thursday. And FOMC meeting minutes tomorrow. So we might see some interesting patterns. We have 2 minutes 43 seconds left for confirmation. So keep in mind all the standard deviations are dynamic in the indicator, so they activate only to the side where we get confirmation, just to make sure it doesn't distract you. Same thing with the standard deviations inside the range. They only appear once we get confirmation, and they only appear to the direction that we need them to. One minute, 55 seconds left. We want to see this stick. We're also hitting a higher time frame PD array, so we also might get a quick retracement. Let's see. Okay, driving through. 54 seconds left. We will most likely get our confirmation. Bit of a pullback. As soon as this candle closes, I want to see if the next one immediately bounces up from this higher time frame PD array. So we have our confirmation. I want to see if this draws back almost immediately. Pretty neck and neck as far as ES and NAS. Let's see if it leaves this fair value gap open. And then on the next one, I'd like to see it tap this, maybe even a little higher, and hit our bottom of the range. Continuing to push still deeper into that higher time frame PD array. That's where the bottom of the candles are. That's where the wicks are ending right there. The 15-minute, the fair value gap matches up with the 5, which is a good sign. I think we will most likely be trending low today. All the telltale signs are there. We just need to know which fair value gap will be most likely tapped into first. 1 minute left. I want to see this gap stay open. 344. This might be a quick move today, hopefully. Three, two, one. So now this fair value becomes our fair value gap of interest. I like to mark these out in a different color just so they stand out, but they're not too distracting. Let's drop down to the 1 minute. I want to see it hit this 20 EMA. So we had a crossover. I want to see if we had a touch here. Still no touch of the 20. Now that NAS is what we're interested in. Let's shift this over to NAS as well. But on the 5 minute, yeah. Ideally, I'd like to see the NAS hit the the 20 EMA on the 5 minute. Tap this fair value gap. So then that means this might have to go a little higher, maybe hit the 20. That's what I'm interested in today. This fair value gap. I want to see a proper tap into rejection, but I also want to see it hit this 20, which is matching right up with our bottom range, that gray line, which is already painted out by the indicator. I'm more interested in the higher time frame. So even if on the lower time frame we hit the 20 EMA, I'm not interested in that. I want to see it hit this fair value gap and potentially, even though this is the same fair value gap that's been painted, I want to see it hit the midpoint, and I want to see this 20 EMA get lower. Maybe it'll even spike up higher, tap that 20, and then the candle body will close within this fair value gap. That's more what I want to see to really tell me that this thing is going to push down, because again, higher time frame, we are bullish. So in order for me to go counter trend, which is something we usually don't do, but again, unless it fits the narrative of the day, Tuesday's footprint usually sets the low for the week if we're bullish, sets the high if we're bearish. Heading towards that, we'll most likely hit the 50, but you got to be open. We want to see some gesticulation happening. 1 minute, 51 seconds for this 5 minute candle to close. A lot of people jump in haphazardly. You want to wait for the all points of confluence. Now we're making our way up, deeper into that fair value gap. Just want to check something here on the 15. Just a small fair value gap right there. It's trying to fill in all the way to the top. That 20 might be too far, so I'll wait to see what happens here now. Still got 21 seconds for this candle close. Remember, no FOMO here. It's already past the 20 EMA. That means it's going to most likely hit the 50 now. So we can wait. And then as soon as it does, I want to see it create another fair value gap. This thing has to show us that it wants to push down. So until I see a bearish fair value gap, I'm not interested. That means it can continue to keep pushing up. Look at all these breakaway gaps that it is yet to fill in. So unless it creates a fair value gap now on the bearish side, we're not interested. It could push even higher until then. But we are locked and loaded now. Now all we're waiting for is this thing to spike, create a fair value gap to the downside, tap that fair value gap, and that will most likely be the play. Ideally, on the 5 minute, I would like to see it hit this 20, otherwise it could come back and hit this 20. That's the only thing we don't want to see. Getting some more gesticulation there. 3 minutes, 47 seconds left. And I'd like to see it hit this 50, or at least create a bearish fair value gap on the 1 minute. And remember, if it takes off without us, that's fine too. This is how we keep our stop losses low. Because as soon as we create a fair value gap, let's say this was where we see that happen. So as soon as we create a fair value gap on the 1 minute, pushes down, and then it comes back up and it taps that fair value gap, we know where our stop loss is. Our stop loss is only going to be 2 ticks above this. That's a short stop loss, right? Let's say again, for example, this is where that fair value gap was. So this would be our entry. That's our exit. Or sorry, that's our stop loss. With our TP set at 1 standard deviation. That's more than 1 to 3. So by the time we hit bottom range, we would be able to switch our stop loss to move our stop loss to break even, take some money off the table, let the rest of it run. That's why we wait for that. No bearish fair value gap yet. Nothing of interest yet. Still driving up higher into that fair value gap towards that 50. Oh, it's close though. We are close. These are the telltale signs we like to see. And again, for whatever reason, let's say it just keeps running and running up. That's fine too. We didn't get into anything. Remember, the more this pushes, the closer that 20 EMA comes to us as well. And we have multiple points of confluence. The 20, we're under the 238, and will most likely then tap this fair value gap as well. That's the New York opening fair value gap. It's tapping the 50. Here we go. This is where it gets exciting. Remember, even though we want to be calm and patient throughout this entire process, you still want to make sure that you understand the narrative. And the more you see your narrative play out, you're going to get excited. It's no different than watching your favorite movie, right? Hitting that 50. Remember, there's no strategy on this planet that's 100%, but we are probability traders. When we see the probability is 70% or higher, then we feel comfortable taking those trades. This is not about Lambos and mansions. This is about becoming financially independent. This is about patiently waking up every single day, going to work, which is looking at the charts. The only difference is this is only 1.5 hour long shift. Now we're at hitting that 50, very close to that 20, very close to this fair value gap. Told you not interested until I see a bearish fair value gap off this 50 or anywhere in this area. I want to see this thing push down. Otherwise, it could spring back up and sting us. Another reason we move our stop losses, right? Because this could give us a proper entry. We could go as low as this, maybe even take this low out, then come back, and then hit that 20. It's always drawn to that 20 or the 50. Here we go. There's your fair value gap. Now I want to see price. First of all, I want to see this candle close. I want this fair value gap to stick. Then I want to see price tap into it. Remember, the indicator paints out where those fair value gaps are. The green ones right there. Just a subtle box so you know where they are. It doesn't distract you. 25 seconds. Remember, we want to see this stick. No FOMO yet. Do not jump in. All points of confluence have to be there. This is a good area for rejection to happen. This is a high probability trade. Again, if you're following along with us, make sure you're doing a demo account. There, that's our fair value gap. Now it's stuck. I want to see it drive up here. Otherwise, if it leaves this one open, then this becomes a breakaway gap. Meaning then this becomes the fair value gap of interest, and we start following it to see which one it wants to tap into. And then when it leaves too many of these fair value gaps, that's what I mean when I say it can come back and tap that 20 EMA. So you got to be careful. $15, $13. So if this gap stays open, this gives us more indication that this thing does want to push down, but again, we got to be careful as far as which fair value gap it taps. So this gap is now a breakaway gap. Now this gap is where it might tap, hit the 20. We want to see a rejection and a push. $30 seconds. So we want to see this close in this fair value gap. We also want to see an engulfing candle. Take this candle out, and then there's your play. That's a high probability trade. Hard to even get out. There we go. We rejected that area. This next candle. It's a good candle to get in on. with our goals set at 1 standard deviation, and this is where we would move our stop loss. A lot of things can happen here. Remember, it could come back, tap this, but our stop loss is still up here. Two ticks above there. I would take partials here. Move stop loss to break even there. And then our 1 standard deviation. Little under 3 RR, but again, today's one of those days where we're going counter trend. We want to take the low-hanging fruit, the 1 standard deviation, which falls right at, if you're looking at your own charts without the indicator, 19,641. And keep in mind, this is not the futures contract I'm looking at. I'm looking at US Cash 100 index, the NAS index. Sorry, this is just because it's aligned with my broker. You want to make sure that the ticker you're looking at aligns with your broker. Trading the futures contract directly is, you're going to see a few more changes, obviously price and things like that. I just got comfortable trading this. Let's move this over. Don't want to be distracted by anything. Again, that is a high probability area. The only thing I don't like, again, is the 20 EMA. I usually like to see it, because usually what could happen is it can gesticulate here for a bit, come back, hit that 20. But if I'm not mistaken, I'm hoping that 20 comes low enough that it's still below our stops up over here, 2 ticks above this. Now the rest of this is just managing your position. I want to see displacement. I want to see candles pushing down. Still hovering in that area. Could come back up, tap this fair value gap, close to that 20. Three minutes past 11 now. We'd love to see this push happen. Goal is to get into a safe trade, which means we've moved our stop losses to break even, taken some partials, which we're going to do at the bottom of this range. Just because, as mentioned before, there's no news today. There's some stronger news later in the week, Friday. So the market behaves pretty erratic on weeks like this, so we got to proceed with caution. You also don't want to see too much gesticulation either. Usually, once the fair value gap has been hit, market usually speeds off. So that means that the longer it stays, it might want to do one more pullback tap. Meanwhile, the 20 EMA is slowly coming down further and further, which is a good sign. But then it also lets me know that I might want to touch it one more time. Again, we work in the world of probabilities though. Too much gesticulation happening right now. I don't want to see a push. We're still on the bottom of that 20 EMA under the 238. All signs are pointing towards a push down. I just hope it doesn't want to do one more pull back to this 20 EMA. Which is kind of a characteristic of on the 5 minute. It always pulls back. Well, I guess it does it on every time frame, but usually before the push, sometimes it comes back and taps that 20. And sometimes it doesn't. Sometimes you miss it, sometimes it catches it. Right now we have 1, 2, 3, and now this fourth candle has 3 minutes 51 seconds left in it. A lot of rejection happening off of this fair value gap. Let's change this color here just so we can follow it properly. Still in the bottom half of the consequence encroachment, which is the midpoint of that fair value gap. So the rejection is to the right side. We want to see this candle stick now, create another fair value gap. 43 seconds left. We want to see a breakaway gap appear here. That lets us know that this thing wants to start pushing down. Don't want to see it pull back up. Again, the longer it does that, the more it'll just gesticulate here. It's building up buy orders and sell orders here. People going short, people going buy. Or sorry, long. All these wicks, people are jumping in. And then on the other side of the consequence encroachment of this fair value gap, everybody's going short. So it's engineering more liquidity here. Meanwhile, the 20 is getting lower and lower, so it still might want to come up and tap that 20. Make a run to that fair value gap, but again, we want to see, the second we see a fair value gap being created here, it'll be a telltale sign that this thing wants to push down. Till then, we just got to sit on our hands and wait. Meanwhile, the 20 comes lower and lower. That's where you see moves like what's called the turtle soup, where it goes up and sweeps this one more time and then push down. Which is all right as well. As long as your risk to reward makes sense. We got 39 seconds left in this candle. That's 1, 2, 3, 4 candles that are projected in that area. This is not a coincidence. The fact that this is happening right in this area. This is part of the algorithm. Remember, it's designed to try your patience. It's an elegant design. This is both psychology and reverse psychology happening at the exact same time. Still just waiting. 20 getting closer and closer. Just in case it wants to go back up. Right now the 20 on the 5. It's right here roughly. Remember, you want to make sure you're looking at it on multiple time frames. "42 seconds left in this candle on the left, on the 1 minute. 3:30 left on the right. Just a little past 11 o'clock. Love to see this push before 11:30 and be out of this trade, hopefully, right around that time as well. The longer a trade takes, remember, our probabilities go down. The longer we see gesticulation, that just means more manipulation is happening. That's why this becomes our new break even. As soon as we hit this, we move to break even. Otherwise, there could be a turnaround happening. Still just gesticulating in that fair value gap. 20 EMA getting a little lower. As mentioned before, this is a telltale sign. Usually it wants to hit that 20 before pushing, but that 20 is coming down further. As a matter of fact, it's kind of matching up with the 50. We don't like seeing slop like this. This is too much. Where the market hates straight lines. It's creating straight lines to both sides right now. Bit of power of 3 happening. Accumulation, manipulation, distribution. So if this thing shoots up, that'll be the fake play. It'll most likely take out these bottoms. Heading for that 20 EMA. Tap that first fair value gap. Hitting the 50 on the 1 minute. Getting closer to that 20 EMA. On the 1 minute, we'd like to see this candle get engulfed. We do not want to see this fair value gap stay open. Just going to get rid of this for now. Just so we can see what's happening. We want to see this fair value gap close. This is where it can get annoying. But just gotta wait it out. $20 EMA getting lower and lower. We're still stuck in that fair value gap. Hitting the midpoint again of that fair value gap. We want to stay below. We'll stay under that 50, and we want to get under this consequence encroachment. Meanwhile, the 20 getting lower and lower. This is a telltale sign of power of 3. So again, we have accumulation. This is most likely the manipulation play to make people think that it's going to go up. It's going to hit that 20. And then push down. Our sentiment is still bearish regardless. Five seconds left. Remember, if you wait for the 20 EMA, for it to hit the 20 EMA and get rejection off of that, you'll definitely get into less trades as the market could take off without you. At the same time, it's an extra added point of confluence. Looks like it wants to hit that 20, tap this. I'm going to move our stop loss even a little bit. No, I'll leave it there actually, because we don't know how deep it wants to dig into this fair value gap. I'd rather look for a second entry. Now we're hitting that same fair value gap to the other side. We don't want to see it bounce off the consequence encroachment. We want to see it push through. Looks like you might want to drive higher. Hit that 20, bounce off this fair value gap. Reason we didn't move our stop loss is we didn't want to throw off our risk to reward. This is still a good risk to reward as opposed to moving it up. Now you're risking way too much. You don't know if it's going to stop there. It could tap that, then push down. But as mentioned before, market hates straight lines. This is accumulation, manipulation. So this is actually more of a telltale sign that this thing is going to push down. So our stop loss has been hit. Bouncing off the 20 EMA here now. Let's see what happens if it presents a second entry. But now we start all over, right? The only way I'd be interested now is to see another bearish fair value gap being formed. So once these fair value gaps have been run through, they're no longer points of interest for us. So I want to see what it does at the 20. It's already tapped this fair value gap. Now let's see if it bounces off the 20 and gives us another setup. That's a strong, strong rejection wick. We want to see if it sticks. We want to see if a fair value gap is presented, and it might give us a second opportunity. Remember, if you're playing this right, you're only risking 1 to 3 as your risk to reward. Then jumping into a second one will not only break you even, it will actually make you profitable. But that's all we do is 2 per session. And the telltale signs have to be there. I want to see a fair value gap created on the 1 minute. Right now we're on the other side of that 50. I don't want to see it bounce off this and head up. I want to see it push through this first. I want to see it disrespect this area. So we got 56 seconds left. The fair value gap has started to be formed. Let's see if it sticks, or if it gets taken away immediately. 37 seconds. We do still have a brief gap there. Let's see if it stays. That's why this indicator's made it so much easier for me. Even sometimes it's hard to see these fair value gaps, how tiny they are, but instead of going in there and painting it out by hand, this allows us to at least see where they are and which way the market is pushing. 7 seconds. Let's see if that fair value gap stays open. Okay, it did. Now I want to see it tap it and push under these EMAs. I want to see the next candle. I want this candle to reject want to see an engulfing candle. I don't want to see it get under these EMAs. Otherwise, if it keeps pushing, we will most likely conclude the session. And yeah, we will most likely conclude the session there. We're getting too much bullish energy coming in. And there's another fair value gap that's slowly being created there. We already took out these tops. That means even if it does push down, the probabilities are now lower. It's gesticulating at the 20 EMA. We didn't get the kind of rejection we wanted to see. As mentioned before, our probabilities drop below 70%, then what will most likely happen is it could just tap this, continue higher. We'll give it another 5 minutes, wait till 11:30 just to see where this market is aiming to go. But as mentioned before, anytime it does something like this where it keeps turtling above and above, the probabilities drop. So even though we're getting a rejection now of that 20 EMA, unless it pushes down hard under this EMA, then most likely it will continue up. Three minutes left in the stream. Let's see if a fair value gap is created here. And you'll see this kind of erratic behavior on days where there is no news, but on weeks where news falls at the end of the week. But anytime we get two of these turtle soups, they call it, our probabilities drop and we're no longer interested. 1 second, so that fair value gap stuck. Now we're under that EMA again, back here. And this might even be the push. Accumulation, manipulation, distribution. But once we see too many of these turtle soups, and that's their goal too, to deter people, but it's not even a deterrence, it's playing it safe. That means there's too much manipulation happening here, and we'd rather avoid that. Got 2 minutes left in the stream. And I'd like to see this come back up, tap this, and then be engulfed and pushed hard. Creating more breakaway gaps. We're below that 20 and the 50 now. We're back at that fair value gap. Until we break out of this fair value gap, I could continue to gesticulate. This could be the move up that we see. This might tap this fair value gap or this fair value gap. But essentially, we want to see it stay below those EMAs. This might want to tap right here. Reject off of the EMA. Reject off the midpoint of that fair value gap again. And then that might be the push down. But as mentioned before, as soon as we get two turtle events, too much manipulation happening. Essentially, it should have pushed from here. We're back at that fair value gap here. Let's see if it just pushes down or if it wants to dig in deeper, which is another sign of an erratic pattern. We're still under the 50, under the 20, at this fair value gap. I want to see it close under this and then be engulfed. Otherwise, it's got this fair value gap it could tap into. It's the last line of defense. That's the last fair value gap. And it also created a fair, or it's on the process of creating a fair value gap. So either it rejects here and it pushes, or it breaks this. And again, if we break this top again, just another telltale sign that this is a chaotic day. We don't like to see these kind of patterns. And remember, you're going to have these kind of days, both where you take a loss or you're just watching a chaotic market. But as mentioned before, as long as you do the right risk to reward, as long as you're managing your position, managing your money, you're going to be profitable at the end of the month. And that's what we want to focus on, is the monthly return. One successful trade a week. The risk of 1 to 3. Risk to reward of 1 to 3. That'll keep you in profit. See again, as soon as a fair value gap has been delivered to, when fair value has been delivered, it wants to push. We want to see displacement candles. That's not what we're seeing here. This just adds more to the erratic pattern. Anyways, we will conclude the session there. Thank you for joining us. We are live Tuesday, Wednesdays, and Thursdays at 10:30 all the way to 11:30. Please check us out on fractaleffects.com, where we teach algorithmic trading. Please check us out tomorrow. Hit that subscribe button. Hit the notification so you know when we're live. And we will see you tomorrow. Have a great rest of the day.